Boom! We are live. Happy Monday, everybody. No, this is not Benzinga live. If you are wondering why you're seeing my face this early in the day, yeah, I know it's really early for me. I'm typically still in bed at this time, but it is our futures trading with NinjaTrader. I'm filling in for Zunaid. Looks like Zunaid had some connection issues, so hey, I'm your host now. So let's go ahead and get the show started. I'll bring Jim on without further ado. Let's get the show going. What is up, Jesse in the chat? Born to be free. I am refreshed. That's what a weekend will do for you. You know, if you treat your weekend right, you get the right balance of work and play. You should come into the week refreshed. Of course, if you go too hard on the play, maybe not so much. But that's enough of that. Let's go ahead and bring my man Jim on. Jim, how are you doing on this beautiful Monday?
Pretty good. How are you?
Good, man. Good.
Well, I got to ask the question. Now, we've been going for about 7 hours right now because we were trading pre-market.
Oh, okay.
What's your normal hours? It's early for you, you said.
No, I know that's a joke. I'm in here before market open every day. It's like a running joke with our audience that I think they think that I crawl out of bed at noon every day. So I roll with it. You know, it's like one of those things. If the shoe fits, hey, if you guys all think I come to the office at noon, and I'll play into it.
I was about to send an application to Benzinga, and I could get used to that.
7 hours. What time? Where are you located?
So I'm in the East Coast. So we get up, we do a little pre-market stuff, and then we have an early morning show called the Opening Range that we get to prepare for. And so
okay.
That's all right. I've been doing this for so long. I'm used to getting up early.
Yeah, I mean we're in Detroit, so we're like I guess technically in the Midwest, but we're in the Eastern time zone, so we're on New York City time. Nice. You know, so it's 11:06 a.m. Eastern here. So you were trading what the futures market opens at 4 a.m. correct?
Well, they're 23-hour markets, right? So the difference between futures and the regular equity markets is there's not this idea of regular trading hours or extended trading hours is different. It's Sunday night, 6 p.m. East Coast time, all night, all morning, all day till 5 o'clock close, and then an hour break, and then that 23-hour cycle repeats itself all the way through Friday. Saturday, take the day off, go out with family and friends, enjoy yourself, then get back at it Sunday night. So it's a little bit different, and which gives the advantage to futures because you could participate just in a regular account. If there's after hours earnings or geopolitical stuff you want to express an opinion in on all these different asset classes, you log into one account, boom, you're good.
So I mean, 1 hour every day. Did someone try to fill that gap in the market? Is there something you can trade in that hour if you're really itching, or is it just everything shut down?
Not really. I mean, it's like dinner time for us, and they reset their servers. I mean, this is the Globex electronic trading platform. It's transparent. It handles millions and millions of contracts. I don't know how many millions, but a lot of contracts every day. Global marketplace. So we need a break. We need an hour break sometimes. Eat dinner. Anyway, it's all good. This is I got the E-mini S&P up right now. I got the E-mini S&P. This is the S&P stock index futures market that I'm looking at right now on my screen. I don't know if you could check it out or see it or not.
Yep. We've got it pulled up now. So I guess one question before we get going that I have, Jim, is what is, the benefit outside of the fact that it is a 23-hour market? What's the benefit to trading futures, above, or what's the benefit of trading futures over just normal equities during normal market hours?
There's a lot of benefits. One of them, let's start with the leverage. Now, leverage is a double-edged sword. It can work for you as well as against you, but you can have a more cost-effective application of your risk capital if you're trading in the futures market. Each contract here, the notional value of one contract in the E-mini S&P, you would multiply the current price, which is $41.55. You can see it on the screen on the right here, times 50. There's a $50 multiplier, right? So over a $200,000 notional value on one contract, and you wouldn't have, you get a lot of leverage, so you wouldn't have to fund it with as much money as you would an equivalent position in, let's say, an SPY, right? So that's kind of number one. But again, be careful. Don't over leverage because it also could be risk. Number two is it's a transparent marketplace. All the bids and offers go to one, are sent to the Globex Electronic Exchange. It's a first in, first out situation. Nobody has priority over anybody else. You can see that the market 10 ticks deep, so you can see actually the order book in real time. And it's an exceptionally fast marketplace. And a lot of these futures asset classes, and there's a lot of them. There's stock index futures, there's metals, there's currencies, way better than over-the-counter Forex. There's treasury complex, the whole yield curve you could trade. You got Bitcoin, you got grains. Grains are, what people mostly say, oh, that's what the futures market is, a commodity market. No, there's all these other asset classes that are tradable and transparent. So those are some of the advantages. It's a much better experience, in my opinion.
Yeah, and I've always been curious about that, because I've always just assumed that the really main benefit is obviously outside of the market hours. But I figured for people like yourself that stick to futures tradings, there are other reasons outside of that you enjoy it. All right, so let's see if we've got any questions out of the chat. Otherwise, I'll let you run with whatever you want to go with, Jim.
Yeah, no, for sure. I mean, I'm just looking. We have a big sell-off today. Obviously, it was a follow-through from Friday. We'll just show you really quick. I'll pull up a daily chart here on the screen just to kind of get a sense of what's going on overall in this marketplace. And we had a really nice recovery from these lows, these horrible lows that everyone was all upset about. And we had a really nice rally here, and it's finally ended. We hit a 200 period simple moving average. That's that red line up here on the top of my candle chart. And then we have a 50 period moving exponential number. So I got 200 simple, 500 exponential. We're trading in that gap right now. We're selling off as we speak, and we're entering into some consolidation zones that I consider this range here, where the top of my crosshairs is 41.55 to this lower level 40.88. I think that's what we're trending right now. I would not be interested in trying to buy, from a day trade point of view, a stock index futures today. Looking pretty negative.
Yeah, I mean, today, the action has just been kind of bad across the board, and I'm curious. I mean, you hear it all the time when talking just about the indices or the overall markets, when people say the trend is your friend, whatever, and it's like we were in an uptrend just straight up for 2 months basically, and I was saying, hey, a little pullback here wouldn't surprise me. I guess what I'm getting at, Jim, is like, what do you have any way of gauging? Okay, is this a pullback in part of a bigger uptrend, or is this the start of a reversal? Right, it's either got to be a little pullback and the upward trend continues, or all right, this is the start of a little potential, something bigger.
Yeah, I mean, that's the $1 million question. That's what everyone has an opinion on. Everyone is expressing their opinion. Yeah, the bottom's not in yet. We're going to have another drive back to the bottom, or this is just a natural kind of price action, right? Volatility, price action, a retracement back down a little bit before we resume our march back up. And, we've had these before, where we've had these bull runs in bear markets, and they do. And interestingly enough, historically, they do last a couple of months before they turn back around. So I'm not surprised to see this pull back down. But I don't know that we're going to go back to 3,600 level handle in the S&P. I think things will get straightened out before then. But I do expect some more downside between now and the turnaround and the ultimate turnaround back to all-time highs.
Yeah. And so what are we looking at right here? The S&P mini futures.
Yeah, these are the S&P mini futures, and there's really four major stock index futures. Are the NASDAQ 100 is also one of them. This is the E-mini NASDAQ 100. Systematically, the chart looks the same, right? So this is moving systematically according to what's going on with expectations, inflation, recession. Remember, Thursday's GDP, so we're going to have another really important number to measure this whole idea of recession. Russell 2000 is the third one. This is the small cap stock index futures, very popular with respect to futures traders. Then lastly, the Dow Jones, the blue chip. They're all kind of systematically having that little arc down. They're all moving different levels and different speeds and different retracements and all of that stuff. But systematically, the picture is the same for all the different stock index futures across the board.
Got it. Yeah, and I think that GDP print will be, a lot of eyes on it, obviously, and a lot of people watching it. It'll be interesting because, I honestly, I have literally no idea what the expectations are. I haven't looked, but say that number comes in positive. Then the debate shifts because it's like, all right, then the people who are saying, or the people on the side of we've been in a recession was like, okay, now if we get positive, then you have to say, okay, we were in a recession, but that was the shortest recession ever that, we didn't lose jobs, we gained whatever, or we were never really in a recession the whole time. Or it's negative, and then the people that were on the side of we've been in a recession are vindicated.
Yeah, no, I know. But this number is going to be very important. Don't get me wrong. But we still have another CPI print and another PPI print before the next 30 days from now is the next FOMC announcement. 50 basis points or 75 basis points seems to be the consensus for a rate hike for Fed funds then. So we are going to have some more data going forward as well. Typically, GDP usually comes in close to consensus. So if there's a surprise, though, you're absolutely right. It could surprise us either way, up or down, and give credence to one of the two camps that are out there.
Yeah, exactly. And I mean, there's also a case where, talking about how important the number is going to be for the market. I mean, it's really about what the Fed's reaction to it. There's a chance that the number comes in below, and then people see that as more likely the Fed keeps rates lower, and then the market responds well. Who knows? Like, you never know how the market's going to respond to these sort of things.
Yeah, and as futures traders, we don't care because literally we can go short just as easily as we can go long. We don't have to borrow money from our broker to go short. We don't have to wait for trades to clear. So it's just a matter of directional preference, right? If you think that the market's going to go down and everything.
Wait, so is the GDP number coming out? Is this a revision of a past number we've gotten, or the first number of the?
I'm gonna show you. I'm gonna pull up my cheat sheet here. This is the Econoday economic calendar. You could use Forex Factory. There's a whole bunch of other ones coming up right now. And so Thursday, I see GDP on August 25th. I'm going to click on that little GDP number there. It's got a red star, which means it's supposed to be important. And this is the second estimate of the second quarter.
Okay.
So you're right. It's not it's not a quarterly number. Quarterly numbers always come out at least a month after the quarter ends. So it would be a little early for that. But this is the second estimate of the second quarter GDP.
I was just making sure because I was looking at an economic calendar on my computer and I didn't see it, and I was like, that'd be a big miss if they had like the GDP number coming out for the first time on Wednesday, and this economic calendar doesn't have it. But certainly, there's a reason that red star is there, so this is an important number that people will be watching. Other numbers I see on my calendar, I'm not sure how important these will be, but Thursday we have initial jobless claims. You have here we go. It was on the calendar the whole time. I was just looking at the wrong day. So it's Thursday, August 25th. Real gross domestic product revision at 8:30 a.m. And then Friday we will have PCE, which is another kind of inflation measure that the Fed actually likes to look at.
Yep, absolutely. So that'll be on the radar screen for sure. So there's going to be activity. There's going to be stuff to do. Even tomorrow, we got couple red star. We got new home sales, which I expect to be more negative. PMA composite. So whenever you see a red number here on my Econoday, my instincts are up. Thursday is also. We'll talk more about this later, but Thursday is the Jackson Hole economic policy synopsis, right? Thursday and Friday, and then
that's right.
Friday, Chair Powell comes out at 10 o'clock and makes does a speech. He's good at that. That's what he does. He does speeches. And so that's going to also give us some more volatility, hopefully at the end of the week, to kind of take advantage of some stuff. Other commodity markets that are really kind of great to look at too. Gold futures now is reversing, right? We had a really nice rally starting from July 21st, going all the way up to August 12th, and now we're kind of totally reversing. This isn't even kind of sideways oscillation. This is reversing, and probably a function of the dollar index being strong as it is right now.
Yeah, I mean, those gold markets to me are always kind of wonky, just different things going on. But if it's one of those things that you trade a lot and people know it, they know it. Jim, I do see Zunaid just hopped in the background, so I'm going to go ahead and get him pulled on, and pass the reins back over to him.
No worries.
Mr. Zunaid, how we doing?
Good. Appreciate you stepping in there. My apologies, Jim.
No worries, Aaron. It's good meeting you, man. Glad you were here.
All right.
You as well, Jim. We'll talk soon.
All right.
Catch me up here. Looks like we were taking out gold from what I saw, and looks like we are now checking out the oil futures as well. Where do you want to start off?
Well, okay. So just to finish up on gold here, Sinead, we're looking negative, right? I mean, this is a classic reversal. We hit a really nice area of resistance up here around 1819, and then boom, we've been selling off ever since. Series of lower highs, series of lower lows. Looking for places to sell gold for sure. Probably a function of the dollar index right now, U.S. dollar right now. Looking pretty negative there. So this is interesting phenomenon going forward. And I was just about to jump to crude.
Let's go ahead.
Let's do it. All right, crude oil, just overall, I have a loosely fitting trend line. The trend is down, right? The trend is down. We have a really nice area support down here from way back in the day, 85.26. And maybe a little, I don't know, this kind of line I drew here is probably going to be deleted right now. It's gone. So looking for places to sell crude oil right now too. I know it's a supply and demand market. We got to think about it, but my Fibonacci retracement high to low, let me adjust it a little bit. We're past 23.6. My guess is we're going to break on down and downside.
Yeah, man, especially with that trend being. So are you going to try to set up a trade here, or do you want to feel something a little better, or what's the game plan here on crude?
Well, on crude right now, I'm going to sit in my hands. We can take a look at the 10-minute chart on crude right here, and you can see. We're trading between S1 and S2. I'll just move my fib line over a little bit, and kind of things have settled down, right? So we had a big move early in the morning. I tried to figure out why we had this big move. I can't tell you still. I haven't had time to really do a lot of research, but this big sell-off happened early in the morning. We traded around S1 for a while. We're between this first and second standard deviation band of the VWAP right now. And my guess is now we're just going to hover around that first standard deviation band for a while. Again, I know it's a little bit of an uptrend here. I'd be more inclined to try to find places to sell crude than just try to take advantage of this of a potential move up. A couple areas of interest here. S1, I love it. I love these daily pivots, especially on days like today when we're trading around it. So I would probably in the micro crude try to get a unit there, and then wait for VWAP for my second unit, or even the 50% retracement for my second unit. So that would be kind of what I'm thinking from a trade point of view, a 2-unit trade, just like that.
Gotcha. Now I do see that you were short. Is that Bitcoin that you were short, BIT?
Yeah, we were short Bitcoin, and this was from a couple days ago. I'm just holding a position over for a long period of time, and we're going to wait and see. I'll just pull over a daily chart, see if I don't even have a target yet, to be honest with you. But
I got you.
This is really correlated with the stock indexes the last couple of days. I mean, look at that sell-off. Boom, boom. I don't know if this is a realistic target way down here at the bottom, right? All the way down here. If things fall apart in the stock index futures complex, then for sure this target is on my radar screen. But right now I feel like there's a little bit of correlation between the two of these two markets.
I gotcha. I'm not sure if, obviously, with me coming down late here, do you already have a position on the minis, or what are we thinking on that side of things?
No. So this is the micro E-mini S&P. We couldn't get filled this morning. It just kept running away from me, and I was like, listen, don't chase. At the same time, we couldn't find a bottom.
Yeah.
Right. So now we think we may have found a bottom, and I would do the exact same thing here as I'm going to do in crude. And that's I'm going to look for some areas of interest to try to create a short position. And right off the top of my bat, I see a couple of really nice areas. I see this volume histogram, this big volume node right here above the 23.6%. I'm going to use that as a target, 4170, to try to get a unit. Again, this is the micro E-mini S&P. And then the second one right up here in my rectangle, which was a long-term area resistance from pre-market. You can see my this area here. We haven't had a body of a candle close in this rectangle for a long period of time, and that area of interest corresponds to 50%. So this might take a while. This might be a day trade, right? It might take till the end of the day if we get there. But I'm not ready just to say, hey, I'm going to start buying because we're going to retrace all the way back in. I'm not buying that buy.
Yeah. Well, what's interesting is that you've got the 4150 whole number is exactly where it bounced from and gave you so far 10 points, right?
Yeah.
But you can see that that's kind of where it has a little bit of resistance based on the last leg. So if it fails here, it has made a lower high once again. But it'll be interesting to see if it actually does come down, if it holds, or what it ends up doing.
Well, interestingly, so S3 is pretty far away. And this morning when we did our opening range show, I was like, there's no way we're getting S3 today. But you know,
50
never
points.
say never, right? And you know, ES is down 71 with just consistent selling. The other thing that's interesting in this chart, that you know, from midnight on through the European session, we have had no retracement back up. It's been nonstop selling. Yeah, we had some sideways action pre-market here in the U.S., but continued selling. So that the cue off of last night, remember Sunday night, Monday. That momentum stayed with us all the way through the open this morning.
Gotcha. Now it looks like you were filled on MCL. I think you had 2, but now you've got 3 positions open.
Okay, awesome. This is awesome. So let's take a look at let's go to MCL first. All right. So we have 2 units right now, right? Now we have some work to do. First of all, this is rallying more than I thought it would, quicker than I thought it would. But idea is, hey, I want to get 1 unit off the board, and I want to move my second unit stop to break even and see if we can get a runner. So I'm going to be conservative. I'm going to say, hey, 23.6%. I want to get a unit off.
Yeah.
Then I'm going to put a stop right at 88.24, right? That'll be kind of a break even stop. So we'll have 1 unit in the tank. The second unit will have a shot at a runner. And let's just put that target in at S2 as an example. And then we have it at S2. Now, the last thing we have to do is consider, hey, at what point am I wrong? At what point am I directionally wrong? And I just want to get out of the trade. Stop. Putting a stop in is best practices for sure. So I'm going to look for some areas of interest. And some areas of interest here. Pivot is the area of interest for me.
Yeah.
The VWAP here, the first standard deviation, is the area of interest for me. The 76.4% area of interest. So all of these are kind of converging together. So I'm just going to go ahead and kind of split the difference and throw in my stop right there.
Gotcha. All right. So we're looking at it right about now. Curious to know why you don't want to kind of maybe go above the Fibonacci line there, 76.40.
I'm just kind of splitting the difference between these 3 areas of interest. And my intent is once we get closer to our initial target is to stop trailing the stop down, just to have a little bit of a reaffirmation that this is just a spike up. And but yeah, I mean, if you're more conservative, then you would move it down to pivot or move it down to VWAP. If you're more aggressive, you'd move it above the 76.4. That's a matter of preference, but all these 3 areas of interest are so close, it's not going to matter that much
I gotcha.
In the scheme of things.
I gotcha. Well, do you have your tip of the week ready so I can go ahead with that one?
We do actually have one.
All right, here we go. All right, what we got?
Jackson Hole Economic Policy Symposium on the heels of GDP revision number that me and Aaron talked about, and a whole bunch of other economic releases that are coming out at the end of the week. My guess is everyone's going to start heading over to Jackson Hole today. By Wednesday night, pretty much everyone's going to be checked into their hotel and they're going to be having cocktails. Thursday, they officially start their meeting. And then Friday, I think 10 a.m., Chairman Powell speaks. So this could definitely change direction of whatever direction we're in by the time we get to Thursday and Friday. So be ready for this. It's going to be a big deal.
I wonder if we'll kind of get chopped around then tomorrow, or especially on Wednesday, because we're waiting comments and whatnot.
Yeah, I know. It could be. It could definitely. Wow, look at this. It's strong. So there's a move of foot in crude oil here. But
I'm taking a look at Oxy here, and that's kind of moving. I'm breaking possibly 70 here on OXY. Any other levels that you see here that you're interested in, whether it's on crude oil, gold, the minis, whether it's the Qs or the SPY?
Yeah, and I'll pull up a relay chart in a sec. I just wanted to monitor the gold position. So right now the gold position is behaving itself. So we'll keep an eye on that. So far, so good. We only got 1 unit. So just from a levels point of view, I do want to go back to the daily on the E-mini S&P. Me and Aaron were talking about this before. I'm just going to draw crosshairs at the bottom of my rectangle right here. 41.65. We're right at it. Again, a lot of times support becomes resistance and resistance becomes support. This may or may not be the case. We'll see if we break on through this where we're at right now. It's kind of a very important level from my point of view. And if we do close below it, my guess is we're going to have continuation selling again tomorrow. Again, my opinion, I could be wrong, but that's what I'm thinking.
Yeah, just looking at that chart there, you can see what's that EMA that you have on top where it literally is at the 200?
Yeah, so I did something a little different. I have a 200 simple moving average on the top in red, and you can see it's really nice resistance, right?
Yep.
And then in the bottom, I have a 50 period EMA. And so I do EMAs for smaller, for 50 or less, simple for over 50.
Gotcha. Gotcha. Yeah, because that was a beautiful rejection there, especially because it was closer to that 43.50. And obviously now we're headed down a little bit lower. I would not be, look, who knows what the future is going to hold, but I would not be surprised if we did go ahead and test 4,100, which is about 58 points below where we currently are right now. But we'll see. We'll see if that ends up happening. Any final thoughts from you, Jim?
No, just, good luck out there. Be safe out there. We have, remember, best practices, make sure you have your stop loss in, and hope to see you again pretty soon.
Awesome. Thank you so much. And again, my apologies on the mishap earlier. I don't know what happened with my internet, but we are all good to go. Thank you for your patience. That is Jim Cagnina, Senior Education and Training Specialist over at NinjaTrader. They will be streaming later on today for bars closing over at www.ninjatrader.com/events. So check them out there. And they also stream in the morning as well. You'll see the whole schedule. Thank you so much, Jim.
Thank you. Have a great day.
Take care.